Hey everybody, my name is Brandon from thestockscreens.com, and today I want to talk about Palantir stock, ticker symbol PLTR. So now let's get started. So here we are in Google, and here we are in Palantir stock charts, and we can see in about 3 weeks we are down about 18%. And if we look into the recent days, however, we can actually see that Palantir has not dropped as much as the broader market, likely because we were down so much already leading up to the drop. And you can see that we were really close to the $20 support level, which we'll talk more about in the last part of the video. However, in the first part of the video, we always try to understand why we were down in the first place. So to understand that, we can look at the news going on here, and if we look, there's actually a pretty wide range of opinions on the stock. As always, it's up to you to decide which side of the coin that you believe in and want to invest in. So we'll go through both sides here to try to understand why Palantir has been dropping lately. The first article that I want to talk about is this Foundry platform thing. We can see that Palantir has been trying to initiate growth by going after startups. And I think that that's a good idea because the startup culture is really hot right now. However, I do not think that startups normally have a lot of money to play with, so I do not think that this will contribute that much to Palantir's bottom line. So instead of focusing on that news, I want to focus on this article here in Seeking Alpha by a journalist named Samuel Smith. So this article actually does quite a good job at discussing the main macro bull cases and bear cases for Palantir, so I encourage you to read it. But just to summarize here, the journalist's three main bear cases on the stock is valuation, competition, and stock-based compensation. We'll first go through competition complaint here. The journalist is suggesting that Palantir competes directly with companies like Microsoft and Amazon to offer data analytics products to other smaller companies. Right now, data analytics is still quite new. Palantir is one of the few companies that focuses solely on this field. And however, as always, when a new thing pops up, competition comes in fast to claim their land. Any competition is a bad thing if you are an investor, so I do believe that the journalist is right to worry about competition, especially if they are concerned about companies like Microsoft and Amazon. Those are definitely not the two companies that I want to be in the boxing ring with. But I have to say, I do not think that it is fair to compare Palantir with Microsoft and Amazon. Yes, perhaps Microsoft and Amazon are developing data analytics platforms to help smaller clients with their data analytics, like Microsoft Power BI and AWS's Kinesis Data Analytics. But this is different from Palantir's option here. These two, Power BI and Kinesis, are, in my opinion, focused on helping clients build their own data analytics in-house. So the clients are still the ones doing the heavy lifting. Palantir is different in that clients do not really have to do a whole lot. Palantir does the heavy lifting. This is why I do not think that Microsoft or Amazon is a direct competitor to Palantir, but in any case, this is a great field of growth for the future. I've said it many times before and I'll say it again. Data science and data is the new oil. In order to make better decisions, you need data science. And for companies or governments who do not really want to build their own in-house data analytics compartment, they can pay a fee to Palantir. As this field of data continues to grow, as we continue on to the next industrial revolution, companies in the data analytics field should grow as well. But of course, the next question is Palantir growing as expected? And to answer that, we'll head over to the most recent earnings report to talk a little bit about how Palantir is doing as a business, as well as to touch upon the valuation concerns and stock-based compensation concerns that the article has also expressed concerns about. So here we are in Palantir's most recent earnings report, and we can see that Palantir actually seems to be growing quite nicely in revenues year over year, with this being the most recent quarter ending on March 31st, 2021. We can see that this growth in revenues is about 50% year over year, and that's definitely a good thing. Also, if we look at the cost of revenues here, we actually don't seem to be growing cost of revenues that much year over year at all. We are only growing by about $10 million. So because we're increasing revenues here by about 50% year over year, but we're not increasing cost of revenues by 50% at all, that should tell me that our profit margins and our gross profit here should increase year over year, and that's exactly what we're seeing. However, the good story seems to stop around here because now we have to talk about operating expenses, which is this block on the earnings report here. We can see that the total operating expenses here are growing again about 50% year over year. But what really concerns me is that we are doubling general and administrative expenses year over year, as well as we're also growing sales and marketing expenses by a pretty hefty amount, again about 50% year over year. When I see that, and then when I also see research and development spending not increasing by more than 50% year over year, that kind of gets me a little concerned. As always, I do not like to see growth in these expense areas in general and administrative or sales and marketing. The reason for that is because this doubling in general and administrative is telling me that the amount of sushi dinners that the CEOs are eating are now doubling, and that they are spending a lot on YouTube ads to attract more customers. I would have expected Palantir to actually not need to advertise their products that much, but here we are. This is concerning to me because a lot of this revenue is actually coming from government contracts. And government contracts obviously do not need a lot of advertising. Palantir is trying to reach out to a lot more private companies. So I think this is where their sales and marketing budget is coming in. However, if we're increasing our budget by about 50% year over year, I kind of expected more revenues to be increasing year over year as well to pay off that investment. Again, with operating expenses, it's all about the return on investment. And here, for sales and marketing specifically, I'm not seeing that much of a return in the revenues here. With a technology company as well, I think that the best return on investment that a company could do would be pouring more money into this research and development. Because as a technology company, you want to invest in your product and you want to stay ahead of the competition. And research and development will do that. So that is what I would like to see more of. The last thing I want to talk about here is share dilution, which is actually the third issue that the journalist from the previous part brought up. And the journalist definitely has a point here. If we look at the weighted averages of shares down here, we can see that the float, or the amount of shares in circulation, is nearly tripling, is actually more than tripling year over year. Because of that, that is definitely dilutive to shareholders, and it does impact shareholders. If you have one share of a company, whether it's 2 shares in circulation, then you have a legal right to about 50% of the company. However, if you have 1 share of the company and now there are 10 shares of the company, well, now you have about 10% of the company. This is why dilution is bad, and Palantir has definitely turned on the faucet and let shares rein in here. This is definitely something that investors need to pay attention to and consider, because it does cost investors money whenever a company does a secondary offering. So after talking about all of that, is Palantir worth its $40 billion valuation here? As always, it's up to you to decide, but revenues do appear to be growing nicely year over year, and Palantir is in a pretty good macro field for growth, which is data analytics. However, there are concerns with operating expenses over here, as well as share dilution. So those are the things that should be weighed before investors make an investment in Palantir. So after talking about the fundamentals of Palantir, now let's talk about Palantir's stock charts here. So here we are in Palantir's trading charts, and we can see that Palantir has jumped up from this $21 support level very nicely the past couple of days. And we can see that this has been a very long-term support level from the stock, where it has tested it a few times in the past. This is definitely a good sign for the stock, as it suggests that we could still remain in this $21 to about $24 trading range. However, if we look, we did break this $21 support level in the past, and where we went down to was about $17. I do think that because we are still seeing quite a bit of volatility in the overall indices at the moment, $17 is definitely not out of the question per se, but I'm skeptical that we could return down to these levels. I think if it does hit the $17 level, then I would be looking to start a position if I wanted to invest in Palantir. But even if we got back down to the $21 level, or even better, $20 level, I think that would be a good entry point, again, to play against this $24 resistance level. So now looking at the MACD and RSI here, we can see that the MACD, our short-term momentum here, which is the blue line, the derivative of that blue line, or the slope of that blue line, looks to be flattening out. And this is a good sign. This is indicating that our blue line here is gaining strength. So our short-term momentum is becoming stronger than our long-term momentum that we're normally seeing, and that's a bullish sign. If our blue line crosses the orange line here, then that could cause some algorithms to buy the stock. If we look back down to the RSI here, which is the relative strength index, we can see that we really bounced hard from our oversold levels here, which could also be a bullish sign. But again, there are macro scale volatility in the indices now, so we could see some more volatility in the next few days. Again, around this $21 level, or even better, $20 level, I think is a good place where I would step in. But for me, I'm a little bit greedy, and I'm looking more for that $17 to $18 level. So that was my review on Palantir stock. Let me know what you thought about it in the comment section down below. If you have any questions or if you caught any mistakes, also drop me a comment down below. If you liked the video, please like the video. If you haven't subscribed yet, please subscribe. And as always, thanks for watching and I hope you have a great day.